Good afternoon, everyone. Welcome back to Commodities Update video. And today we'll be looking at technical analysis on natural gas, UNG, US dollar, oil, gold, and silver. So we'll be looking at the support and resistance levels as well as the most likely scenario price to be heading into later this week. All right, start with NatGas NG 4-hour time frame. And the chart, make sure to click this BADJ on this bottom right corner here. So your chart would look like mine and with no contra gaps. All right, so on the weekend, I talked about EMA 12, this teal looking line, exponential moving average 12. On the 4-hour, acting as resistance, 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 resistance. And saying that just to keep things simple, as long as prices under it, bears are in full control. But I was also talking about that we're probably going to come heading into support. So you can see this is pretty much the last level of support where bulls bounce off the last time. And we look like we bounced off of there as well on overnight and Sunday. And RSI was getting a little bit oversold as well on the 4-hour, so a slight bounce makes sense. And looks like we got over that 4-hour EMA 12 and had a little pop. You can see after we got some follow through from the bulls. Decent, let's see, when we got over that, decent 4% bounce. But the thing is that we came to the first level of supply. So this was the last level where there's a little bit of sideways range where there's consolidation, meaning the more consolidation there is sideways, that means there is more supply there. So that means buyers are here. So let's say, you were a buyer here and you thought this was going to bounce, but it didn't, it went lower. So now when it comes up to it, you break even and you want to get rid of it. So that's pretty much the psychology of it. Otherwise, if it was something like here, where there was no consolidation or sideways of supply, then it would be a lot easier to go through that. But because there is supply here, looks like bears took over. And this is pretty much the first level of supply bulls need to get over. This tiny little supply, and they couldn't. So that's not a good sign. And it looks like we're back below the 4-hour EMA 12 as well. And RSI has cooled off. So now things are not oversold. So it can go even lower. If bears are going to do it, take it lower. So we zoom out to the 8-hour. Since we got over the 4-hour, you can see we never actually got over the 8-hour. We pretty much closed on it, and then the next candle we pretty much came below it. So that's a rejection for me. And as long as I talked about this on the weekend, saying after the 4-hour, we want to look at the 8-hour because you can see 8-hour was pretty clear of a rejection as well. On the way up, it was support, 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 support. After we've broken it, we haven't really gone over it as well. Right now, what are we looking at? This may potentially be a bear flag. So let's go to the weekly. And let's go to the daily. So this may be a daily bear flag. So let's measure from the top of the move all the way to the bottom of the move, right? We only bounced, we bounced close to like 25% of this entire drop, right? You can see this was 23% and we just peaked above it. So that's 25. As long as below 38.2%, it's a bear flag. So this could, bounce here, chop around, bounce around. And the next thing you know, if it's going to confirm a bear flag, we're going to need to break this low. But an idea of a bear flag is just a weak bounce and chop around, consolidate a little bit to cool things off for the bears to take things lower. So far, we have 1 day, 2 days of bounce, and right now we rejected from the first level supply. So let's see if the bears don't break Monday's low, then this could be the bear flag. We just chop around, tighten up, flag up, and the next thing we know, we may potentially get a break from that. So we'll see next couple of days, see if it shapes out that flag, or we come back up to retest this level or this level. So right now, pretty key levels. You can see bulls need to break above this 2.45. Bears need to take above this Monday's low. If they break Monday's low, then we pretty much broken the lowest point that we have been for the adjusted chart. All right, let's take a look at UNG. UNG is exactly a similar idea. You can see it didn't even close above the 4-hour, but AR EMA 12, perfect rejection from the AR EMA right there and right there as well. So as long as NatGas going to keep bear flagging, this is also going to bear flag as well. And it will probably come down to test the low of this structure if NatGas breaks its low. And yeah, continue to keep things simple. As long as it doesn't get over 8-hour 12, EMA 12, bulls aren't really going anywhere. And if you guys want to learn more about simple strategies, go to my Patreon page. There's mentorships. And if you guys learn anything, feel free to like, share, and subscribe. And let's continue. The dollar. So the dollar equilibrium, super clear for us. Been talking about this for a month, and it's playing out exactly as we've been looking at. Go to the weekly charts. Equilibrium, tightening range. Big move up, big move down, big move up, big move down, big move up, big move down. So still tightening up. So probably going to tighten up till end of July or into September, because we have an FOMC meeting end of July as well as early September. Those two events will shake up the dollar for sure. All right, oil. Oil, same thing, tightening range. Talked about that. If we don't get over this pivot, it's going to continue to tighten up and come back down. So big move down, big move up, big move down, tightens up, gets even tighter. Didn't break above this pivot, so it's still tightening up. Even goes all the way back here. So now we will be watching to see if bears are going to take it below this pivot. But there's lots of demand over here on this area. So before that, obviously, we need to break this sideways range first, and then the sideways range first for bears to test this equilibrium low. So pretty much right at the spot is the first level to see if bulls will show up. If not, then we'll be looking at this $77 to $74 range is where the next level that bulls should show up. And then if that breaks, then we'll be looking at down at this the equilibrium tightening range low. See if it's going to be a bear break. Breaks there, then I'm looking down at closer to this triangle low. And if bulls do show up, pretty much right here at this spot, then we get a bounce. Then I'm looking back up to this high, and if they can break this high, breaks that, then we get a bull break from this tightening range as well. So those are the two levels I'm looking at for oil. Gold here broke out of our triangle on Monday. Support. Resistance. Broke out here. And now it's not getting a lot of follow through. I mean, it did get follow through on Friday, but Monday I took it back down. But no signs of huge red flags yet. As we can see, we held Friday's low pretty much. So bulls are playing defense here. And as long as bulls hold above this triple bottom, then they should have a chance to come up to this 2400 range to test it again. So right now it's pretty much just trading a sideways zone. And let's see if they get it. And if bears break that, then we're back down to looking at potentially down here again. But first, we'll probably test this prior support. Now it's going to act, prior resistance now going to act as support. Probably test this first before breaking down into here. All right, silver, similar idea with gold. Finally broke out and it's holding as well. So as long as it gold is holding its triple bottom, silver will hold its level as well. And you can see each day's low is higher than prior day's low. So that means the buyers are in a good position and nothing sweating at the moment. Yeah, so we'll see if gold retests this 2393, then silver will likely continue to test this. And these are just the resistance here, pretty much this first one. And this one is a little bit stronger resistance, but we need to get over this one first. And if we do come back down, we're probably looking back down at 29.8 if bears take it below. All right, that's all for you guys. Feel free to comment if you guys have any questions. And I will see you guys probably Thursday for more updates. Have a great rest of you guys' week.